To prepare Form 990EZ, you need to understand the concept of a balance sheet, or as it is called in the nonprofit world, a statement of financial position. This video is a short introduction to the idea of a balance sheet. Here's what you should remember. Net assets or fund balances equal assets minus liabilities. Assets are what you own, such as your bank account, your equipment, and so on. Liabilities are what you owe. This could be a credit card balance, mortgage, etc. Your net assets or fund balances are just what's left over after you subtract your total liabilities from your total assets. This determines if your sheets are balanced. If this is your organization's very first tax return, the beginning of the year balances are going to be zero. Now, this is not the case if your business has been in business for over a year. Depending on your business's bank account statement at the beginning of the year, enter it here. What your statements reflect at the end of the year, December 31st, should be reflected here. So based on your assets entry for the beginning of the year, use the balance sheet to report all of your organization's assets. For example, if you purchased office equipment for $1,000, enter your asset here, but update your cash balance. Now let's say you use your organization's credit card to update your office furnishings and it costs $500. Update the amount on your assets, but now you have a liability. When you include both, your net assets remain balanced. You can now review all of your net assets or fund balance entries. If done correctly, your balance sheets and entries should be balanced. If your net assets are imbalanced, depending on your balance sheet, you can correct your balances by clicking Edit, updating your entries until both beginning and end of your net assets or fund balances match successfully. For further understanding of your balance sheet entry, your end-of-year revenue stems from your statement of revenue entry, such as your contributions, gifts, grants, and similar amounts received, whereas your expenses stem from your statement of functional expenses. This is where you can correct your end-of-year entries to reconcile your net assets.